Hey, how you doing? It's Clayton Teeney from the First Home Buyer Club. 100 lessons in 100 days, day 79, lesson 79. Today, what I want to talk about is fixed versus variable rates. So before I get started, I should explain to you, I'm not a financial advisor, nor am I giving you financial advice. However, here's things I've learned over the years through property and finance itself that I've taught myself and have worked in the past. I would always recommend, though, you speak to a finance expert, a mortgage broker, the bank direct to get the final piece of advice. Here's things that I've learned over time, and here's a couple of questions I want to cover about. First one is really what's the differences in the rates between fixed and variable right now? So depending on you yourself, your servicing and what you're looking at purchasing could be the reasons why you'd consider upfront a fixed versus variable rate or a part fixed and part variable rate. Depending on who you go and see, the bank, the broker, and depending on what you're purchasing, you may be required to fix part of it to get that interest rate right down to allow you to borrow a little bit more. Although I should tell you straight off the bat, the aim when buying a house and having a mortgage is not to borrow the most amount of money possible just to say you've got a massive mortgage. You really need to be considering when you are purchasing your own home, what your lifestyle is going to look like when you do own a home, how much that mortgage is going to cost principal and interest repayments, and then do you factor in things like rates, water, insurance, and like anything in life, you always should allow a little bit of a buffer just in case the worst ever goes wrong and you need something just to get by. The second thing, is there any account fees for a fixed or a variable rate that you need to understand up front and you need to factor in? This could make a huge difference again at the end. The other one on when we talk about that is what sort of break costs are associated if you do decide to fix your rate, and is that going to deliberately hamper you? Point number 3, and I only just thought of it today when I was speaking to one of my mortgage brokers, Darren, is when you are considering a fixed rate, what is that bank like? So let's just say you get your home approved with the bank, and it was like an utter nightmare trying to get approved, and you're always having issues. If you fix that rate, you may be locked into massive break costs to get out of them. And if it's been a punish up to this point, just be mindful of that before you fix it in for a massive difference. Point number 4, do you currently have the ability to make extra payments each week, fortnight, month towards that mortgage, and how much is that going to accumulate each year? Good example of that, right? Let's just say that you're in a position to put an extra $500 every week onto your mortgage. Now, we'd always suggest put in the offset account just in case, because you get the same benefits of paying down the mortgage, but it's there. But like, you think about this, if you're doing $500 a week, there's $26,000 a year or $78,000 in 3 years' time. You wouldn't fix it for 20, 30 or 40 and only be able to have 20, 30 or 40 variable when you're going to pay off 78, right? You want to allow more so you can pay it down and extra. The other thing you need to consider if you are going to fix the rate is that what do they allow you to pay extra on top of the max of repayment? So let's just say you fix it at a certain figure and your repayments are $400 a week. Do they allow you to pay off extra on that mortgage? I know when I had my first home, and I've only ever fixed the rate once, and that was way back at the start, but I know I was allowed to make an extra $10,000 a year. So understand these things when you're working out your numbers and find out if it's going to be best suited for you. Point number 5, are you planning on selling in the next couple of years? Could there be a change in your circumstances, good or bad, that you need to consider? And are you actually going to look at this when you actually fix it? Because again, there's some really good fixed rates at the moment. I see them in the ones, which can be very enticing. But if you're planning on selling a house in 12 months, why would you fix it for 3? If you're planning on moving in 12 months, again, and you're going to try and get rid of that house or sell that house or move on, maybe consider that before you fix the rate and try and look at getting break fees. And point number 6, And the one that I probably will finish off is, why are you doing it? Because I get a lot of people, they're like, oh, I want to fix my rate because my cousin and a brother or this person fixed their rate and everyone said it was a good idea. Just because other people are doing it doesn't mean it's right for you. Things you need to consider about, and especially I didn't talk about it so much before, what is your current debt levels on top of your mortgage? So a good example, right? Let's just say you have $50,000 in personal debt, cars, jet skis, boats, personal loans, whatever it is. And you know that you've got 3 years remaining of those loans, and you got to weigh it up. You're like, what's more important to me? Paying off all those personal debt in the next couple of years and then just having a mortgage, or trying to make extra payments on the home. Now, one thing I always tell all my clients to think about, and again, it's not financial advice, but it's numbers are the numbers. If you have a home loan at 2, 3, or 4%, yet you have a personal loan at 15 or 18%, doesn't matter if the personal loan is 10,000 or 100,000, 18% is still a lot more than 2, 3, or 4%. And so when you're factoring in these numbers, you need to understand, like, the aim of the game with any debt is to try and pay it off and free up your money. The aim of creating wealth is really to have more money and more choices. So if we can pay off all your personal debt faster, and as a result, you've got more cash to live off and enjoy, if that's investing or just enjoying, I mean, the choice is yours. Understand this and understand what's right for you and your family. Now, if you get to the point you're still stuck, what's the best option for you? Seek professional advice. You've got mortgage brokers, you've got banks. As property coaches, we're happy to refer you and assist where we can, and give you a bit of knowledge that we've learned over the years too, to make sure that you're right, making the right decisions. But don't just fix it for the sake of fixing it, but don't not fix it because you're worried that something might happen. Weigh up the decisions and see what's going to work best. All right, guys, happy Monday. I'll talk to you soon. Bye.